You are watching Market Watch, the brief overview of the key events from the world of finance. Investors remain hopeful that the recent Middle East escalation has peaked, despite ongoing threats from Israel and limited rocket fire from Iran. After an initial surge in equities and commodities following the ceasefire announcement, price movements have since leveled out. Geopolitical tensions remain in the background, but fears of major disruptions to oil transit through the Strait of Hormuz have not materialized. This relative calm continues to support market resilience in the face of persistent risks. Falling oil prices and expectations of looser monetary policy in the U.S. have weakened the dollar, with the currency index nearing a 4-year low against the euro. 2-year Treasury yields have also dropped to 6-week lows. Investors now anticipate that inflation pressures may remain contained, especially amid a lull in global conflicts. Meanwhile, gold, long seen as a safe haven, remains in demand amid the uncertainty. U.S. President Trump has ramped up pressure on the Federal Reserve, demanding a 2 to 3 percentage point rate cut. His comments came just ahead of Fed Chair Jerome Powell's testimony in the Senate, where Powell is expected to justify the Fed's current stance. While Powell warns that new tariffs could fuel inflation, declining consumer confidence in the U.S. is intensifying calls for a rate cut this summer. Markets, however, still see only a modest chance of immediate policy easing. Strategists expect up to $1 trillion in new U.S. Treasury issuance in the second half of the year, mostly in short-term maturities. The surge is driven by the need to finance a growing budget deficit amid the White House's expansive tax and spending plans. According to analysts, the Treasury will likely focus on 2 to 7-year maturities, avoiding longer-dated bonds to limit rate volatility. While money market funds may absorb some of the new supply, the volume could still trigger fresh turbulence in bond markets. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.